The Ag Week Market Wrap is sponsored by Gateway Building Systems.
Welcome to the Ag Week Market Wrap, brought to you by Gateway Building Systems. I'm Jamie Dickerman with the Red River Farm Network. We're joined once again by Randy Martinson of Martinson Ag Risk Management. And Randy, another interesting week in the markets for sure. A lot of different headlines again, kind of moving things around because we don't have tangible stuff coming in from the government. We're still shut down, so we're blowing in the wind with headlines a lot of times.
That's exactly right. And, when you look back, actually, I think the last 3 or 4 government shutdowns, the market has performed better during the shutdowns than before. And this looks like it's going to be the case again, where we're actually seeing some good market movement. As far as corn and soybeans are concerned, wheat continues to kind of be sluggish. And then, of course, the meat's now turning a little bit. But overall, you're right. I mean, we're still void of market news. The only news we're getting are export inspection numbers, a few export sales that are being announced that don't go through the U.S. government channels, and then the NOPA crush numbers, things that aren't tied to the government. And all of those numbers have been coming in fairly friendly and fairly optimistic, so that's helped support the market. But most of the news has been coming from, the increase in tensions, decrease in tensions, or however you want to put it, with trade talks with China and also now with South America.
Yeah, we had a little bit of a meeting between American officials and Brazilians talking about their future there too. So a lot riding here on this trade, and like you said, the on again, off again situation with China. At least when we're talking right now here on Friday morning, there's a little bit of optimism, and that has moved things in the positive light for soybeans, especially picking up on that.
It is, and even taking a step back and looking at soybeans, the fact that, we've been delayed in harvest a little bit because of the rains, yields haven't been as impressive as what was expected. So we're likely going to see USDA have to decrease soybean production numbers for the US just because of below expectations for harvest. And then also the fact that farmers are putting them in the bin and they're not selling them. That has really caused basis levels to tighten up in a lot of areas, especially for end users. So we're seeing a little bit of, market movement because of just what's going on domestically. But then all of a sudden the news broke that, China's still looking for beans for December, January. They are not going to buy them from South America because their prices are too high. And they're talking about bringing those beans out of reserves. Well, it equals to about 8 to 9 million metric ton, which is about 300 million bushels. Well, that's a lot of beans that are sitting in their reserves, and they can pull them out of there. But it does open the door to the U.S. possibly having an opportunity to sell beans to China, and that's really helped the futures market increase this week and give us a little bit of premium.
Now, in the wheat market, that's been a whole different story.
Wheat market just can't seem to get it together. I mean, again, the battle cry we've had for the last 3 years is that if we could only get exports, this market could see a little better movement. Well, we've got exports, our demand is better, but world production keeps increasing in all these other countries, and the major exporters too, which Australia, Argentina, you look at it with Ukraine. Now the EU they're raising the import quotas from the Ukraine so that they'll import more product from them to help their economy. So all that is kind of a little bit negative towards our wheat market. And, everybody raises wheat, it seems like. You can raise wheat on a rock and everybody does, So, I mean, there's always a crop being harvested every month. So it's tough to stay on top of that export market. And that's kind of one of the things that is kind of holding the wheat market back in the U.S.
Now, over into the livestock market, we've seen that very again, cattle extremely volatile. We've seen some high numbers now as we're talking today. Those numbers are going the other way, but it's been again quite volatile in that market.
E- Extremely volatile. I think we put in new all-time contract highs, the previous 4 days, each of them, where the cattle markets have just been, rallying and running and holding on to gains. And then it's the trifecta yet. It's the same three reasons that have pushed this market all along, and that is tight supplies, strong cash bids, record-setting bids at auction sales, for cattle, and then also, good demand. I was at a cattle auction yesterday, and it's unbelievable what some of these prices are going for cattle. But then again, just like we saw in soybeans that turned the market to begin with was a post from someone, another post came out that says they're going to do the administration is looking at trying to lower the cost of beef for the consumer. And that started the market lower. Well, now all of a sudden we're hearing about a deal possibly in the works with Argentina for another $20 billion going towards them to help and then to allow us to import Argentina beef. And like you mentioned earlier, the talks with Brazil about lowering tariffs there, which will allow their beef to come in. So we're looking at the possibility of increasing the supply of beef by increasing exports or imports from Brazil and Argentina to help deflate our prices a little bit. So, at this point, it'd probably be nice just to let the market work itself out. But they are trying to look at ways to bring more product in to help the consumer out at the grocery store.
Well, and yeah, and if you anybody that's been to the grocery store, they know you gotta work a little longer to get that beef now, Randy.
There is a good point to that. Beef is now becoming, kind of like, the lobster, it's been becoming more of a, once a month meal instead of once a week meal. Even hamburgers gotten up in price, but when you start talking steaks, that's, certainly is leaving the average consumer's table a little bit more than what it used to. But the thing is, the product or the consumer has been willing to pay for the product up until now. So they've been accepting it because of the value that it brings. But, it is pretty high priced. And, I'd say we're kind of due for a little bit of a retracement in this market. But again, it's better to let the market do its work.
We have seen the hog market continue to kind of hold its own though throughout all this.
It has done a little bit better. I mean, it seems like to an equilibrium price and it's trying to figure out what it wants to do from here. Part of it is, the fact that we're seeing less production should have been supportive to the market, but I think that's what worked us up or worked us higher earlier. And right now, that market is now trying to find its way and trying to find its spot in the consumer's diet. So I think that's part of what we're seeing in the hog side of things.
So, looking ahead here now to next week, I mean, obviously, again, the government is shut down, and in that story, there just doesn't seem to be any movement really either way to get that resolved. So, again, status quo. We're not going to be getting those reports. So, what are we going to be looking at?
Yeah, you're right. I mean, and the big ones, it's the export sales report we're not getting and of course the crop production report, so we're not seeing the USDA's numbers that they're saying, or where we're looking at for harvest progress and crop development. So yeah, that is leaving a little bit of a void. I think right now the market's going to continue to watch where the export inspection numbers come. If they stay strong, that means that we're selling the product. Corn demand continues to be strong, both ethanol and on the export side. We did have a few announcements last week or this week about some corn sales. So I think, we're going to watch where harvest progress goes, the weather, that's going to dictate a little bit. And we're getting closer to that potential meeting with President Xi and Trump. And that also is going to play a pretty big role on whether or not China makes a good faith effort and says they'll buy some soybeans from us, or if they walk away from the table and not buy anything. That's going to be the real dictate, really give us a direction of what this market's going to do.
The other piece of the market that's just been on an absolute wild ride, gold, silver, those, I mean, just it's been crazy to watch.
It's been an unbelievable run this week just in the gold price, and again, that kind of signals uncertainty. And that, people buy gold and silver and tangible items when there's uncertainty, and they're buying it with a vengeance as, now gold and silver all-time new contract highs in both of those markets as well. And, I think we're looking at a pretty big run, and I don't think gold is quite done with making that run yet.
Well, it'll be interesting to see. Randy, always a pleasure. Thanks for your input. We always appreciate it.
Yes, thank you.
Randy Martinson, president of Martinson Ag Risk Management. For markets and market analysis throughout the week, listen to your local Red River Farm Network radio station affiliate or visit us at rrfn.com. The Ag Week Market Wrap brought to you by Gateway Building Systems.